Yeah, welcome back, traders. This chart you see right here, this is on gold, and then I took this trade on gold, but I exited this trade already. I exited somewhere around this point right here, even if I know that price is going to get to the take profit, but I just have to keep this trade to grow my account properly. But then I'm going to give a quick recap on this trade. This is on gold. I was actually expecting this from Friday night when I look on the chart. Now this was the open of the market. I think from this point right here, this was the open of the market right here. Pardon my drawing. I'm going to use this. Yeah, this was the open of the market, and then you'll see that spread rally up right there. So let me take this all off, and then we can see how I managed to secure this trade. Now from the higher time frame, started from the daily time frame, I was anticipating that for a while from last week, and then it finally came to our point of interest before displacing. If you can see that we are overall bullish on gold. See price forming this low, a break of structure back into the discount area, and then we have this break of structure. So what do we expect? We expect price to keep on that structure until it gives us a market structure shift that it's about to continue a bearish direction. Now this is on the daily time frame, which means that we cannot trade on this daily time frame. So we just have to know that price is on a bullish run. So what you do, you go down to the hourly time frame or the 4-hour time frame to like find your edge. From the daily time frame, you can mark out your key levels, or what we call your institutional reference point or point of interest, using the smart money concept. And you can see right there we have an order block. Now the last lower low, which is this one, I'm going to take this one step at the time so that everybody can understand what I'm doing. And then it bounced off this order block. Now if you look closely, this order block is confluencing with this fair value gap, making it valid, right? You see that fair value gap right there. It's a tiny one, but I hope you can see it. Now I'm using forex.com. You see that fair value gap, right? So whenever you have a fair value gap in confluence with an order block, it somehow increases its validation. And then we have a break of structure right here on the daily time frame. I'm going to take this one step at a time, just like a top-down analysis, so that everyone can see. Now we have this break of structure, and then we have a fair value gap, and then this order block, right? Analyzing the chart, I don't have to place all of this. I'm just doing it for the sake of this video, since my dealing range is just from this point right here to this point, right? This is where I am consigned with, right? Not what have happened right here. So the hold that I'm consigned with is within this range. And then you can see that this other block falls below 50% of this whole dealing range. And then this fair value gap is just at the middle of this 50%. And then you can see that price has traded even below, close to this golden zone, which is 75%. So what I did was to mark out my fair value gap, which is also valid, but I know that price was going to trade down into this order block because it has a more discount price, right? So coming down to the hourly time frame, I saw this displacement right here on Friday, but the 15-minute time frame gave me a better view of the market, right? You can see from the 15-minute time frame, this was where I caught that okay, price is about to reverse. I saw this Friday night, then I was awake when price opened by 12 midnight. I saw this gap right here. I knew that price was going to fill in that gap and then trade lower for us to get a trading opportunity to flow along with the market. Now if you measure from this point up to this point right here, you see that price traded to 75% and even deep down below, right? But from the 1 hour time frame is where I got to know where I'm going to enter my trade, and that was when I saw this balance price range, right? This balance price range when two fair value gap is overlapping with each other, and then you can see that it's also struggling to pass to close below this daily order block, right? Let me go back so you can see. So look at that daily order block. I always use the body and not the wick. Always I use the body, especially when it's on the higher time frame. I'm always using the body of the order block, right? So you can see how price is struggling to close right there. So initially the target was to be this high right here, but I'm not gonna target that. I'm not greedy, then I'm not swinging the position. I just want to get a good move up to this draw on this liquidity right here. This was my target. This draw on liquidity, that wick right there was my target. So I didn't catch this trade until when I came to the chart. I saw this wick rejection and then I entered immediately. I entered with my stops below, and then my target was up here. It was about 360 pips, about 360 pips thereabout. You can see this is 370 pips, but it was around 360 pips thereabout. So that was it, and then you can see price rally up, then push down. I don't know why this massive retracement that looks like it's going to fail, but then again price rebounces off immediately, right? So if I was to swing this position as a swing trader, they're definitely going to target this high right here, but I'm a day trader. I prefer to target this high. I cannot withstand looking at the market, checking my charts, all of that up to this level. I could find other opportunities to take price up to that level, but then I don't always trade good. Just few times I trade good, few times. Maybe I just check the chart, and then when I get something like this that looks very clean, then I tend to take the trade. Then you can see that I even posted this trade when I caught it. I posted this trade right here on my Telegram channel. You can see position yourself to join the bullish run on good, and then boom, I see we're heading higher, right? That was it before we had that massive retracement. I think my network is a little bit poor. So guys, that is it. That is how I do my top-down analysis on gold, and not just on gold, every other pair, right? I was looking at DSY and then Euro USD, but the pair is just moving somehow. So I just had to focus on gold. Now I even posted a video on this analysis, right? The price was going to trade back into this dealing range before expanding, and you can see what happened. Even at that, we are struggling, but still price respected that zone, and price didn't even trade below. You can see price didn't trade below this low. So if your stop loss is there, you are still safe. Exception of spread. I think, yeah, if you have a tight stop loss, you probably might be out of this trade. But let's see how it goes. Let's see. Guys, I hope you enjoyed this video. Please like and subscribe to my channel. Thank you.